Hey, it's Trevor with your Edmonton housing market update for the month of February 2025. Let's jump right into what's going on. Looking at the total residential, that's the market as a whole. Think of it as the overall general picture. It's not quite as detailed as certain market segments, but it gives us a good idea on what's happening overall. So this market was sitting at a balanced market of 44.54%. It's leaning a little bit more towards a seller's market than a buyer's market, and that's up since December. The average price for the market as a whole in Edmonton was sitting at $420,897, which also went up from last month. I don't like the average price as much as composite benchmark pricing, so I'll go into that after this segment and we'll take a look at that as well. The average price can get skewed if you've got a lot of higher priced properties selling 1 month. That can bump up the average price. Whereas if you look at benchmark pricing, it's a little bit more consistent data. Now, in terms of active and solds, there was 2,665 active listings at the end of the month, and there was 1,187 sales. So the number of listings were up 4.59% from December, and the sales were up 12.09% from December. So even though listings were up, the sales were up more. So that did shift the balance of the market a little bit. If you compare that to last year, listings are down almost 14% from the same time last year, and sales are up 12.7% from last year. So definitely seeing a pretty significant change from last year as well. Average days on the market for the whole thing here was sitting at 48 days versus 44 days last month and 59 days in January of last year. So also a significant change in how fast the market is moving. Now, in terms of the market distribution, this is basically just what percentage of the market is selling at different price brackets. Under 200,000, you had 17.5% of the market. 2 to 300,000, it was 14.4% of the market. 16.3% of the market between 3 and 400,000, and 22.4% between 4 and 500,000. So that is currently the biggest segment with the most activity. And then between 5 and 600,000, you still have significant activity with 15.6% of the market. Then you get a pretty big drop off in the 6 to 700K range with 7.4% of the market, and 2.6% between 7 and 800,000, and then it gets pretty small after that. Now let's take a look at the benchmark pricing. So we've done the market as a whole segment, so the closest thing I've got to compare to that is the composite benchmark price, which is again trying to look at the market as a whole. It does have a particular property that's describing. It's not perfect, but it's still helpful in terms of seeing what's actually happening with pricing. And so the benchmark price in January 2025 in Edmonton was sitting at $410,200, whereas in December it was at $392,000. So that's actually a pretty significant jump just in 1 month, and it's going pretty much straight up in that 1 month. We'd have to see what happens in February once this month's done to see if that kind of continues, but that definitely is different than what we've been seeing in previous years. If you look here, you can see in January 2024, the benchmark price was $366,600, and that was basically the low for the year. Usually November, December, January are one of the lowest months from a seasonal perspective. That's usually when the prices dip for the year, and then you'll usually get your peak sometime in the spring. But we basically saw here in January, we're hitting a new high essentially for the market as a whole, which is not what's been going on recently. If you go back even further, you can see that we've now surpassed the previous peak of April 2022 when the benchmark price was $407,300. So we're now above that in January, which is a very odd month to see that happening. I do think that's because the inventory is so tight. You know, when inventory is tight, that's where you'll start to see upward pressure on prices. I'll point out a few other things once we get into other market segments like townhouses and specific styles of detached homes. But this is the first one to take a peek at. It definitely shows you things are happening a little differently than they have in previous years. So let's look at the next segment. All right, so let's look at detached homes now. One of the favorite segments, always detached homes. This is sitting at an absorption rate of 44.8%, which is technically a balanced market, but again, leaning more towards the seller's side of things. Average price was sitting at $554,989, which was also up significantly from December, up 4.39% from December. In terms of active listings, there was 1,317 at the end of the month, and there had been 500 690 sales. So the active listings are down 3.09% from December, but the sales are up 3.15% from December. And if you compare that to last year, you can see the active listings are down 22.3% from January of last year. So that's a significant drop in active listings. And the sales are actually down a little bit too, but not nearly as much. They're down 1.5%. So slight drop in this number of sales, but a significant drop in the active listings compared to last year. So it does put us in a different sort of situation. Average days on market was sitting at 50 days versus 44 days in December and 59 days in January. So it's 9 days shorter than it was this time last year, but it did bump up from December. In terms of market distribution, almost nothing under 200,000, you got 1.5%. Between 2 and 300,000, you got 4.7, 4.8%. And between 3 and 400,000, you got 12%. After that, it jumps up a lot with a big chunk of the market between 4 and 500,000 with 27.8%. And then between 5 and 600,000, you got 27.6%. So those two are basically neck and neck in terms of where all the action is for detached homes. 6 to 700,000, you got 14.4%. So it's still a significant part of the market, but big drop off there. And then 4.6% between 7 and 800,000 and 2.7 between 8 and 900,000. Gets pretty minimal after that. The next thing I wanted to do is look at benchmark prices for detached homes. So I got two different segments for this. We'll look at 1 story and then we'll look at 2 stories. So 1 story is going to include like bungalows, bi-levels, raised bungalows, properties like that, whereas the 2 story would be your typical 2-story home. So we'll start with 1 story. This is showing a similar recent trend that we saw in the composite benchmark price, with us having a steep incline in January 2025 with the price going up to $446,600. Again, if we compare that to previous Januaries, you can see January 2024 was pretty close to a low for the year of 2024, and January 2023 was definitely the low for the year. In 2022, January wasn't the low, but it was pretty close to it, and then it wasn't until after that that things went up. But we're already seeing a pretty steep increase with the January numbers. What differs about this one compared to the composite is we're well above the 2022 peak, whereas the composite, it showed us pretty much around that peak, all other things considered. So we kind of met the peak sometime last year in this early spring and have kind of gone further past that point. And we barely had a dip in the fall and winter months, unless something changes in February and this just was a weird blip that goes back down. If the trend continues, it's definitely going to look pretty crazy this year. There's a lot of stuff hanging over our heads, like, you know, are we going to get tariffs? Are we not? I don't know. Each week it seems like something else might happen that will play a role and could change things if those get implemented and how severe they are and all that kind of stuff. But right now, if we just ignore that and just look at like inventory levels, where the market's at right now, like we are seeing a fair amount of upward pressure going into the rest of the year. Like mid-February right now, it's still really cold outside. It's not exactly the spring market yet. But let's take a look at the 2-story now. So the 2-story, this one looks a little bit different, but again, similar recently. So you can see January 2025, we hit 539,200, whereas the previous like big peak was in April 2022 and it was 531,200. So we are above that, but there's not nearly the gap that we're seeing with the 1-story homes. The 2-story homes, I think, saw more aggressive price appreciation the last time around, so they haven't had as much oomph behind it, and they are at a higher price point. So I do think they're more sensitive to interest rates and just people's incomes, right? Like if you can't buy a 2-story home, maybe you're looking at a 1-story home. And if you can't buy a 1-story home, maybe you're looking at townhouses. And so I kind of see that as kind of like the top of the market in terms of pricing is usually like the newer, bigger 2-story homes, and then you have 1-story homes. Then you got townhouses. And then if people get priced out of that, then maybe they're looking at apartments. And so when those top end of the market gets really expensive, I do see some people moving to the next one down on what they can actually afford. So maybe it was really hot up here first in the 2-story homes, and then that kind of moved down into the 1-story homes. And if that gets too hot and people get priced out of that, or they don't see the value anymore because there's a big gap between that and townhouses, now you start to see action in townhouses. Now I'm starting to wonder if we're going to actually see that going into apartments, which we'll get into later on in the video here, because those are also behaving quite a bit differently than they have in recent years. Let's continue on here with semi-detached. This is basically going to be half duplexes and residential attached. This is a pretty small market segment, but it is in a strong seller's market right now with just over 70% absorption rate. And it's been seller's market territory for quite a while. In November, it fell right at that 50%, like right between a high, like end of a balanced market going into the seller's market. But this one has been hot all this last year, essentially. Average price for the half duplex, you're looking at $422,560. And then if we look at the actual actives, there was 211 active listings at the end of January and 148 sales. So that's what I'm talking about when I say it's a small segment. Like we had over 1,000 active listings in the last segment, and this one's barely over 200. So it's like 5 times smaller market segment than what you're seeing for detached homes. The inventory is up from December. It's up 6.57%, but down 9.44% from January of last year. And the sales were up 19.35% from December and up 48% from January of last year. So a lot of increase. You can see that's the main thing that drove the seller's market in this, was just the sales really going up over the last year. Average days on market is sitting at 40 versus 33 days in December, and January of last year was sitting at 51 days. Market distribution, you can see the reigning champ is between the 400,000 and 500,000 with 52.03% of the market. 300,000 to 400,000 is the next biggest segment with 22.3%, and then 11.5% between 200,000 and 300,000. There's almost nothing under 200,000. And then between 500,000 and 600,000, you got 10.8%. So I know I didn't go in order, but was jumping around from biggest to smallest segments there. So that's what you're seeing in the semi-detached market. Don't have benchmark prices for this, partially because it's such a small segment. So we'll go into townhouses. Now, before we look at the townhouse data, I did want to let you know that I am a realtor here in Edmonton with REALBroker, and I'd be happy to help you on your journey of buying or selling a home in the Edmonton and surrounding communities. You can reach me on my cell at 780-819-5508. Again, that's 780-819-5508. Or if you'd just like to book a free strategy call with me, you can go to booktrevornow.com. That's booktrevornow.com. And you'll basically just select a time on my calendar and we can hop on a free 30-minute strategy session. You can ask me anything you want. I'll do my best to help you out as best as I can. And we can just kind of go from there. All right, so let's continue with the video. So looking at the townhouses, we can see that that is also a seller's market. It's sitting at 64.48% absorption rate, so not quite as tight as the semi-detached, but still strong seller's market. Average price sitting at 300,000. Number of active listings was 290 at the end of January, and the sales were at 187. So it's a bit bigger. It's about 50% bigger in terms of inventory levels compared to semi-detached, but still a lot smaller than detached home market and the apartment market that we'll look at next. Active listings were up 8.21% from December, but down 16.67% from January of last year. And the sales were up 12.65% from December and up 19.11% from January of last year. So seeing pretty significant increases in activity there over the last year and continuing from a bit of a drop in December, which is pretty normal. Average days on market was sitting at 37 versus 36 last month and 54 in January of last year. So again, continuing at that same theme, usually January is supposed to be a low point and we're hitting things pretty hard already in January. Market distribution under 200,000 was 17.6% of the market, so still a decent chunk. That's going to be your older townhouses typically. Generally should not expect to see stuff built in the 2010s or later or even early 2000s under 200,000 for the most part. Between 200,000 and 300,000, you got 29.9% of the market, and then between 300,000 and 400,000, you got 37, almost 38% of the market. That's the biggest segment, between 300,000 and 400,000 now. A lot of the stuff that used to be in the high 2s is now in the 3s, essentially, for townhouses. There's also 12.8% of the market between 400,000 and 500,000, but it's significantly less than all those other 3 segments we talked about before. All right, so now let's take a look at benchmark pricing for townhouses. So these ones in January 2025, they also had a pretty steep uptick from December, with a benchmark price of $278,900. We've come a long way just in the last couple years. Looking at January 2023, the benchmark price at that time was $219,700. That's a pretty big increase for townhouses, and that's literally 2 years. You can see January 2024 was sitting at $231,000, so that's 46,000 increase in 1 year on the benchmark price. So we did see big increases in the last year for townhouses. That market was quite crazy, and it's doing the same thing this year so far. We're not even anywhere close to where we were at in 2022. We were still under 250 for the benchmark price, so we're quite a bit higher than that at this point. And this market is tight. A lot of people that have families, if they can't afford or don't want to spend as much to get into a detached home, then townhouse is usually the next best thing that they're looking at there before they would move into the apartment segment, which brings us to the apartment segment. Apartments, we've got a much different picture, but it's still shifting. So there's some interesting things happening. We're sitting right on the cusp of a buyer/balanced market at 30.47% absorption rate, which is up from December when it was at 21.5. So it's actually a pretty significant shift. If you look over just over the last year, it has popped up a couple times. It popped up in October and July, and then last year it popped up in February, March, April, and it did get more balanced than where it's at right now. Like in April, it's at 35%, which was more closer to the middle of a balanced market. Average price for apartments was sitting at $204,013, and the active listings at the end of January were 860 active listings, and there had been 262 sales. So active listings are down 6.11% from December and down 9.66% from January of last year. And the sales are up 32.99% from December. So big increase in activity on apartments going from December to January. And the sales are up 29.7% from January of last year. So that's big increases in the sales activity, which is kind of getting to what I was referring to earlier, is okay, are we seeing more of that trickle down of activity that we were seeing in detached homes and townhouses, and is that now moving into apartments? Average days on market was sitting at 57 days versus 56 days last month and 67 days last year, so shaved 10 days off on average. Under 200,000 is 62.98% of the market, and then between 200 and 300,000 you got 26.7% of the market. 300 to 400,000 is only 6.87% of the market, and then it's almost non-existent. Over 400,000, you're basically luxury apartments after that. Let's look at the benchmark pricing for apartments here. This one looks different than the other charts, but still showing a bit of an increase just since November, December. We're sitting at $193,900 benchmark price, and you can see we're pretty much right where we were at with the peak of last year already. So last year, the apartments peaked in June 2024 at $194,100, and going back to January of 2024, it was at $170,700. So it's up 24,000 just from January of last year, which is a significant increase. And I keep being surprised by this market, because when you just look at it, like the absorption rate as a whole, it's okay, we keep barely getting into balanced market territory. But I have a bit of a new theory developing where the apartments have been in a buyer's market for so long in Edmonton that maybe as soon as we actually get balanced markets, or start to get a more balanced market, like some of those gems or really nice apartments that had sellers that just weren't willing to sell them before because they weren't happy with the prices, maybe some of those are coming up, and buyers that are serious about buying something for the first time in a while are actually willing to pay a little bit higher price for them. And maybe that's kind of pushing the market up, because it doesn't totally make sense that we've seen a decent amount of price growth in the benchmark pricing for apartments, given that it's still leaning more towards a buyer's market territory. So I have found you still in the apartments, you definitely shouldn't be getting your hopes up that you're just going to see crazy gains compared to last year. You still need to price them right for them to move, but I think some of the nicer ones are starting to actually sell. So maybe that was a little bit convoluted, but that's just something that I've been seeing a little bit as a way of explaining what's happening in the apartment market. This is definitely one to watch because it's behaving much differently than it has previously. This is looking at the last 5 years. In 2021 to 2022, you have a little hump going into the spring market, and then it goes back down in the fall, and then it has another hump that's basically the same, and it's just not going anywhere. And then it actually dropped after 2022 when the interest rates rates went up. You could see that one actually went down just this last year. Definitely saw significant increases in prices for apartments that was just not there before. So that's my 2 cents on that. Hopefully that makes sense. But yeah, that pretty much wraps it up for the Edmonton housing market update for February 2025. Hope it was valuable for you guys. I'll see you on the next video.